Good day, ladies and gentlemen. Once again, I welcome you into the fourth part of the introduction to Forex trading videos. I hope you guys checked out the first, the second, and the third part. If you haven't, please do yourself a favor and do go check them out. So yeah, in this video, we'll be covering support and resistance. So specifically, we're going to be looking at how to identify support and resistance levels, support and resistance levels using trend lines, things to look for in support and resistance levels, and how to identify broken support and resistance levels. So without wasting any time, let's go into the actual market. Okay guys, as you can see, this is the actual MT4. I hope now you're familiar with this platform, you know how to use it, and you are quite efficient in using the features that it has. So yeah, we already spoke about support and resistance levels in part 3 of these videos. So in this video, we're just going to elaborate a little bit on these concepts. So you'd remember that we said you draw your support at the bottom and your resistance at the top. So when you draw these levels, guys, please make sure that you concentrate or you use current data to draw them. So current data, I mean recent data. You remember that we said we read the markets from the left to your right. So anything towards your right is recent, and then anything towards your left is old data. So let's start with support. So we're gonna look at the lowest point in which the market came recently. So in this case is this one here, this candlestick. So as you can see, there's another candlestick because we're looking at the live market. There's another candlestick that is yet to close. So we're gonna use this one that is closed here. We put our support level there, and then for resistance, we're gonna look at the highest point in which the market went recently. So we're going to put our resistance level there. So this is your support and your resistance. Again, you remember that we said these levels can be used interchangeably. So meaning that if it's a support, if it gets broken, now it's going to change from being support to what? To resistance. If it was resistance, once it's broken, it's going to change from being resistance to support. So let's look at old data, you know, to further emphasize what I just said here. So you will realize here that this line was your resistance. So it was resisting the market to go above this point. Even here, although you see there was a bit of false breakouts that you see there, but then it was resisting the market to go above that point. But then when you get to this point, the market broke this level, and once it broke this level, now it was no longer what a resistance, but it was support. So here it got broken again, and then it went back to being resistance, but then got broken again. It was now support. Here it was support again, got broken again. Here it was not resistance anymore. It was not support anymore. It was resistance, but then it got, and ever since it was broken here, it has been support ever since. So as you can see here, the market broke, and after it broke, it supported the market. It supported the price from going below this level. So you can even check here, although it didn't reach this point, the market was still above this level. So in simpler terms, once the market is above a support level, as is the case here, this support is still valid. But then once it gets broken, where the market now crosses to the bottom side, it's no longer a what? It's no longer a support. It now becomes resistance. Same thing with the resistance line that we drew here. It's resistance because the market hasn't broken above it, so it's restricting the market from going above it. So this is still resistance. However, if it gets broken where the market goes above it, it's no longer what? It's no longer resistance. It's gonna be what? It's gonna be support. Now, talking about these levels being broken. let's discuss how you say a level is broken. So we say a level is broken once the candlestick or the market closes below or above. So let's use support as our example here. Here you can see it was resistance because the market was below it. So it was resistance. However, when it got to this point, the market actually broke and then closed above this line. So this candlestick opened here. Remember, we discussed this in part 2 that bullish candlesticks open at the bottom and closes at the top. So this candlestick closed here, which is above this line. So this line was no longer what a resistance, it was support. But then it changed back to being a resistance once the market broke it and then closed here. Remember, bearish candlestick open at the top and closes at the bottom. So to confirm whether a level is broken or not, please consider where the candlestick closed. So in this case, let's use this current candlestick that's going or that is yet to close. Because this is a live market, this candlestick hasn't closed, as I said. But then if this candlestick closes below this level, which is support currently, it will no longer be support, it will be resistance. But then if it closes above it, this will remain a support. So don't get confused with if you see rejections in these levels. Rejection doesn't necessarily change that level to be something else from what it is. You just consider where the candlestick closed. So what I mean by that, this candlestick can come all the way down here, but then eventually leaving a rejection and close above. So that wouldn't mean now that this level is no longer a support, is now a resistance. No, for as long as the candlestick closed above it, it will remain a support. So there's these levels, actually you can use them as part of your trading strategy, meaning that you can actually look for buying opportunities in support levels, and then actually look at selling opportunities in resistance levels. However, there's a lot of things that you guys need to look for in this level to actually execute those opportunities. Things like your rejections, your market structure, or chart pattern. Remember, we discussed this in part 2 that there's reversal and continuation patterns. So if, for example, we see a reversal chart pattern on a resistance level, then you can take your sell there. Whether you see the chart pattern or rejection on a support level, you can buy or you can execute a buy opportunity there. So yeah, these levels you can actually use trend lines again. Remember, we spoke about trend lines in the last part of this video. So I think it was the third part. You can actually identify your support and resistance using trend lines. Remember, we said trend lines, we use trend lines to connect a series of points together to show a prevailing direction of the market. So in this case, we connected this point and this point and this point and that point there. So when you draw this trend lines, try to connect as many points as possible, best fit. So this is the bottom trend line, and then this is the top trend line. So the bottom trend line is just the same as your support. The support, remember we said we draw it at the bottom, same as the bottom trend line. And then resistance one, this top trend line, it acts as your resistance, just as the horizontal resistance level is drawn here. So this trend line is restricting the market from going above this level, and then this support trend line, which is the bottom trend line, is preventing the market to go below this level. So again, in simpler terms, once the market, or as long as the market is above the bottom trend line, then it remains a support. And once the market is below the top, this is the bottom. So once the market is above the bottom trend line, it remains a support. And then once the market is below a top trend line, it remains a resistance. So here, as you can see, the market was restricted from going up, and then here it was broken, but then it quickly came back, meaning that the breakout was not sustained. So that's how that you can actually consider it as a false breakout. So when they talk about false breakouts, they talk about something like this, where the market actually break a level, but then that move is not sustained. As you can see, it was broken here, but then it quickly came back and continued going downwards. So here it was broken convincingly. It's not a break. It's not a false breakout. As you can see, the market after breaking went all the way down, unlike here. So yeah, that's basically it with regard to support and resistance. You can draw them using horizontal lines, or you can draw them using trend lines. And remember, you can use them as part of your trading strategy, whereas you still need to use or consider other factors for you to be executing your buy or your sell on either a support or a resistance level. So yeah, that's about it with regard to support and resistance, guys. I hope you enjoy it. Please don't forget to subscribe, like, and share.